Hi guys, welcome back to the channel, and in today's video I'm going to share with you my small account challenge and some of the updates that I have. So why am I doing this? I'm actually on a mission to try to see if I can achieve 50% growth in a single year. So that's the goal for this account. And I also want my journey to encourage small investors, right, to start investing towards their own financial independence. And I want to show that you can actually start small and grow. Lastly, through my learnings, my mistakes, I can share, hopefully I can share more insights with you so that you can pick up along the way. So the timeline summary is I started with 10,000 for 15 June 2025, and up to last month value on the 15th is actually 14,254.38. So this month itself, right, I actually made quite a few bad trades, and then the account actually came down to about 13,093.8. And out of this itself, 828 are rewards credit. The rest itself is all from the profit from stocks and options trade. So this is actually the 10-month milestone. And approximately this will equate to about $226 per month. So if today you want to earn this 226.58 per month, using a savings of fixed deposit account, if you are getting 1.5% per annum, you actually require a lump sum of 181,000. But I'm actually right now only using 10,000. So what happened on the dropping of the account itself is that this month itself, I think the market has been pretty volatile, but at the same time itself, I did make some mistakes on some of my trades. So I actually lost two trades on gold, and I actually lost one trade shorting the market. So I'm going to dive into what happened. So first of all, this is actually the chart for gold. Oops. Okay. So for the chart of gold over here, right? I actually this is the area of the price point that I actually still am bullish because it was like touching as a 20 EMA as a support. So I actually long the GLD. But however, what happened is that there is this significant dip over here. And this significant dip over here itself was actually a brutal drawdown of 10%. And from these two trades itself, generally I like to limit my losses for a small account, right, to actually about 3% per trade. So that if let's say I do lose the amount, I will only just lose like 3% max per trade. However, this dip itself actually caused my positions to lose more than 3% because I can't react in time. And the system that I actually created itself, right, is more of like manual stop loss. I don't really use the system to do a stop loss. So from what I can learn from my mistake that I did over here is that I think that doing a long trade at a 20 EMA is still a very valid point. But however, the position sizing for my GLD trade itself at that moment of time was actually 50% of my trades. So that itself is not a good idea. I generally think that GLD is more volatile compared to the S&P 500. And this is only one asset. The S&P 500 is actually 500 companies. So one asset itself, sometimes volatility like this can happen, which is you do see there's actually a brutal drawdown over here, and then there's a brutal drawdown over here itself. So when a single asset price move like this, sometimes it's very hard for the traders itself, right? To especially for me, it's more of like kind of a swing trade, and I sell options trade. So this itself is a very bad a bad moment itself in terms of the charting itself, which in the end I triggered stop loss and I have to cut the position. But when I trigger stop loss and cut the position, if I'm able to cut at 3%, I think I'm still fine with it. But however, I think the losses escalated more than the 3%. So I think per trade itself, I lost about nearly 5% of the portfolio, which is still contained, but not ideal, which is not something that I wanted to happen. Because if let's say stop loss at 3%, that would be strict. And the second thing is position sizing. Generally, I like to trade more as a S&P 500 rather than GLD itself. But at this moment of time, what happened is that I think I overtraded because 50% of my trades is in GLD. So I got two positions. Per month, I only do 4 trades for this small account. So two GLD trade itself, like going more than 5% plus, that itself is almost like 10% of the portfolio. And that actually explains what happened to the portfolio dip. All right. And the second thing itself is on the S&P 500. So S&P 500 itself, right, market has been bearish. Generally, when the market is bearish, I think it's still fine because there are positions that I can still hold, and some of the bullish trade itself, right, generally might trigger stop loss. But the thing is, the mistake I think I did over here which is a bit tricky because there is this price over here, which is this red line that you see is my 200 SMA. So when the price actually went below 200 SMA, is the period that I'm a bit more careful and I just want to be a bit more leaning towards more bearish rather than bullish. And when the market actually goes up over here itself, right, near the 200 SMA, prior to that itself, right, when I executed one short trade over here, this short trade over here is I was assuming that the 200 SMA is going to be a resistance. And out of this resistance, then maybe it bounces and then it goes down because due to the uncertainty in the market. So that trade itself that I did, I think I wouldn't really change it, but it's still a loss. But what happened itself, right, is in the end, it didn't become the resistance. It actually broke the support. But when it actually broke the support, I think my reaction could be much faster to stop loss even earlier. But this time around, the trade itself is stop loss within my trade limit. That itself is 3%. So this itself, it will equate to about like 3% plus another 10%, around 13% of the portfolio. My total portfolio risk for this small account is 30%. Meaning, if let's say today, if I really all my trades gone wrong, I will lose at most 30% of this 10K, which is 3,000. But right now, basically based on the two failed trades of the GLD and the XSP, what happened is that I think that itself is about 13%, still within the loss limit for the portfolio. Not ideal, but at least the account itself still survives. All right. So looking at this itself, right, it's like what I mentioned earlier. GLD position is one asset class versus the whole S&P 500. So if you are trading GLD also, do keep your position sizing small. Don't over trade on this because it tends to be a bit more volatile compared to the S&P 500. And the second thing, when I do the back cost spread, which is I actually short the market at the point of time at the 200 SMA, which is over here, which I actually shorted over here, then it actually broke the 200 SMA has the support. Okay, what I can do better, right? I thought that rather than trade on prediction, because I was predicting the 200 SMA might be the resistance, I should trade on confirmation, meaning maybe just wait for one more candle to see is there the 200 SMA, is it a resistance? So if it hits the 200 SMA and it goes down, trading on that candle itself, right, will actually makes the whole setup more valid. Rather, I predict and try to catch the earlier move, which in the end might turn out right or wrong. So this is like a 50-50 thing. So maybe having one more candle for prediction to be a bit more patient, that itself will be more ideal. So the holding summary right now, 13,093, 20% is still in cash. Then the rest itself is like a bit of stocks. Then the rest in terms of ETF. Okay, so the stock market performance right now after the after the three losses itself, the wipe down was quite a huge one. So as you can see right now, the portfolio hasn't been performing that well versus the indices in terms of 2026 year to date. However, I think still okay. I'm not going to be so worried about it. I just gonna take it easy and then plan my trades properly. Since I'm doing very small trades, like four trades a month, only one trade per week. Just try to find the best setup and set it up for the trades. So, but if I look at the S&P 500 past years return, right? For the past 10 months, this is actually the 10-year mark. My total return itself is still about 22.65%, which I think is still very ideal. So the 10K itself, right now is at 12,265 minus the 828 credit. My total profit is 2265. This itself is a total return of 22.65. But if today you compare to the S&P 500, right, the return approximately is actually 17.16%. So I still beat the S&P 500 benchmark by about 5.49%. I hope I can continue to do this and do it better and learn along the way. But I think this lesson sometimes it also is good to show you all that okay, account itself don't really just keep on going up. There are going to be time that is going to be volatility, but it's just that you have to embrace the volatility and know what to do. Like what happened this time around, even though three trades went against me, but however, the account is still surviving. I did not like wipe out the account and then in the end I can't trade, I have to top up new money. Nope, it's not like this. So basically right now the account is still tradable. I will just continue and try to find better setup for my trades. So the calendar P&L right now, Jan was 2.8, Feb was 2.8, March was the one that the drawdown was quite drastic, 11.96%. Then on top of that, then April right now is like up about 0.2 as of today. So my total positions right now is still very similar. I do have a bit of like crypto in terms of the IB and Ethereum, Bitcoin and Ethereum, but you see the losses are quite crazy. But the position sizing for this trade is like 1% or less for the portfolio, so it's fine. Then I do have the QQQM and VOO, which hold a bigger portion of my portfolio. Then for the trade wise itself, I do have like gold and my XSP. So SSP generally I do like bull put, bear call spread, and there's also a put broken wing butterfly trades. Sometimes I do if market is a bit volatile. Then SMH has been doing very very well this year. Then of course the Hong Kong and CQQQ and Tesla. So these are some of the holdings. Generally, I don't really find companies and do research on this small account challenge. I'm just trying to buy the indexes and just trade options on it to create the income. Okay, so the chart last month itself, this was what happened. Market went down quite hectic in the very drastic manner because of the news of the war. Then the chart this month, you see, so sometimes it's pays to be patient to buy shares when the market come down like this. Because last year, the same thing that when April, I think Donald Trump did the Liberty talk and talk about the Liberation Day, and market tanked by quite a fair bit. At the point of time, if you bought any shares itself, basically it will all do well because subsequent it actually has a rebound. As long the economy keeps on humming ahead, generally the stock market goes with earnings performance. So I think some noteworthy news coming out is that the news of the war right now is softening out. So even though you hear right now a lot of noises on the war and stuff like this, you do see that the stock market right now is at an all-time high. It's at 703 today. And this month itself, the end of the month, there are some big tech earnings over here. So expect some volatility to happen during that period. So if you are trading, trade safe. And if let's say there are some opportunities around the corner and there are some companies that you like to buy, of course, do find some chance to see if there's any good prices for you to collect the assets that you want to collect. So that will be all for today. So if let's say if you enjoy the updates itself, feel free to hit the like and subscribe button so that more videos like this can be recommended to you. So I'll keep you updated soon and hope to have a better month next month, and I'll keep you updated again. See you in the next video. Bye bye.